The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. FOMC announcement today at 2 p.m. Hope you guys are awake at that point. We know what they're going to say. Both sides of the fence, as usual. No change there. How'd the Cubs do, P? I'm blocking it out right now. I don't want to jinx it. Anyway, let's get right into a couple of things we need to talk about here. Japanese yen, little concerning now, getting back down below this 103.50. I got to look at this as a little bit of still noise here on this particular trade. This is kind of the, we broke through the 103.78. I got stopped out there. I'm trying it again a little bit lower here. But again, the yen right at the precipice here of, this is a Wednesday, obviously. A daily close below there is going to be awful. But still looking at this as a very good trade on the long side, just coming into maximum support right now. Let's take a look at the British pound. Talked about trading this one outside the profiles, and lo and behold, we're getting ready to possibly get a daily close above that 122.83. That's going to be important. 122.83 unfair highs on the daily. Again, I was trying to avoid trading inside of a very thin profile. It's a low probability situation, even though we had caught some trades in that scene. Now a daily close above. Looks like we're going to be able to use that 122.83 as support on the British pound. The euro, man, just gone nuts here on the upside. Gotten above this selling point, 110.37. That was a stop out for me too. That's okay. And as we look at the U.S. dollar, and here we go. As we look at the U.S. dollar, had kind of passed through some borders, had a daily close yesterday right around the bottom of the daily profile, 97.75. And now we're coming into kind of like the yen trade maximum support, 97.16. So I took a little nick on that one also, but that, again, that's okay. That's just the way trading goes. But right now we're at a maximum support area around 97.16 on the U.S. dollar. S&P's pretty good washout yesterday. Here's the daily situation. This week we kind of got up into that 21.31, 21.33, 21.34 is that weekly unfair high. Close below, go back and retest. I still think there's some downside here. The VIX is going to probably stay pretty jacked up. I don't think even with the market kind of consolidating here, anything's going to really obey when it comes to the VIX. And I still think there's some great trades there on the VIX in general. Steve Banger was on. Let's see if we can get this up. This is the ETF on the VIX. You got 37.75 as a weekly unfair low on this one. I think did we reach that yesterday? Didn't quite reach it. Got pretty close to it on the ETF, 36.77. So I think we could actually get up into 37.5 and possibly even higher on the VXX. Let me see if I can get the see if I can get the right contract up here. Daggone it on the VIX. Sorry guys, trying to get my fat fingers adjusted here. Let's see here. Here's the futures contract. And there we go. So Do I think the VIX can actually climb higher? The answer is yes. And what Steve Banger had been talking about recently about doing a volatility play, and Joey had been talking about that also, what's the better trades on the books, the long dollar and the volatility trade and the yen trade. Those are still in force. I don't think that's going to be something that's going to turn around anytime quickly. You got that, election on the 8th, and you guys know the story. Trump's numbers are starting to turn around here. And it's going to be interesting to see, but I just don't think this thing's going to obey it anytime soon. Let's see here. All right. Okay. That being said, we're also going to take a look at Apple. And this was I was not unhappy to see this. We had that weekly close blow and then talked about using 114.82 as a defense area against shorts for this thing to continue to head south. There's that 110 area. It looks like we reached that previous unfair high. Talked about that was going to be, first targets. I think this thing could actually head a lot lower. We reached a low yesterday of 110.53. We're trading, about looks like it's printing about 111.23 right now. So, how do you perform this trade today? I think you're still looking for areas to sell. The 60-minute high, 111.56, and that's basically where we closed yesterday. Let's take a look at Tesla. All right, so Musk is drumming up new comments, new things, as usual. Closed at 190.79. We talked about using 201 as an area to play defense above on this one, and the market obviously not giving this thing any help. Here's the weekly, and I think we could really do a plunge on Tesla now. I know we've kind of sold off here recently, but 196.76 unfair lows on the 240s. That's an area you can sell. I hate to sell things in a hole right here, but if we start getting some momentum and start eclipsing, what was this low down here? 187.87. There are going to be some stops being hit. There's going to be some people running for the door, and we could easily see 160, 155 on this particular stock in a heartbeat. Crude, continuing to head south. 46.23 was that first takeout point on crude. That was the targets that we talked about from 49.50, actually from 52 up there. We've explored the fair auction. I think you got to sit tight on crude right now, and kind of a wait and see is probably in order on this one. Gold. Okay, so we talked about 1,300. We're going to talk about this a little bit more when we come back, folks. Stay tuned.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Just want to point out our breadth charts got pretty solidly negative last week. And really the internals have pretty much folded over. We talked about trying to look for areas to sell based on these longer term and intermediate term breaths being negative on the S&Ps in general. And we're going to come back to gold in a second here, and then we're going to talk about the S&P chart again. But there's that weekly unfair low on gold right now, 1,300.40. So it looks like we reached a high of $12.99.50. So that's within, what, 90 cents? Man, what am I doing? Where's my math? 90 cents. Not so excited about selling gold right now, though. But you've definitely reached some targets on a long trade there. Here's the daily. There's the horse out of the barn thing above 1278.5 that we talked about. The election is kind of running the show right now, and makes me think also, again, the VIX is possibly going to continue to rise. So going back to the S&Ps, just to reiterate what we talked about earlier, 2134 is that big number. And what do you do with it now? The good news is we're going to have a new 240 profile appear here, more than likely, into the futures section. Let's see here. Where are we at? There's that kind of red cell with the yellow peel back. So you're going to have some new numbers to play around with here on the 240 in just a bit, I think. So this number right here, this whole landscape's going to ratchet down, and then you've got some new areas, in my opinion, to play on the short side. Like we talked about yesterday, the leverage, there's just not a lot of reasons to really get long in any type of big way right now. And we talked yesterday also about, people trying to put hedges on portfolios, or even putting hedges on, are going to drive the market down relative to somebody having to take the other side of that hedge and then kind of, hedge themselves, so to speak, of taking the other side of that trade. So I still think that's going to be in order. But again, we'll have a new 240 popping up. Somebody's asking, do I think we'll get back up into 2134? I really don't think so. I think we're kind of down here to stay right now. I think this 2100 area being pierced yesterday, kind of getting his head back above on the daily. I see us at best consolidating here as far as longs go. And, you got to kind of think a little bit ahead here. I mean, if Trump does win, there's going to be some, as you know, some of the, not slamming the left or slamming the right talking about this, but there's going to be some people that are not very happy either way. So I just don't see Hillary winning. I don't even see that being a victory for the longs. So I just don't see a really winning situation here for longs at all. And I see the volatility picking up. Even though the VIX reached 20 yesterday, I believe. I think the market does go down either way. I think Steve Bangor was actually alluding to that too. And I don't see anybody really wanting to be holding a lot of long instruments without hedges, and a lot of people just kind of hitting like, hey, enough's enough. There's no edge here. And you could have some more people exiting the market in general during this week. I think by Friday we will have a lot more volatility and a lot more downside on the S&Ps. How much more downside? Don't know. Kind of let the profiles regulate that down for me. Let's take a look at silver. We talked about gold. Silver's kind of reaching past the weekly infra highs 1836, 37. I don't see a reason to really be shorting silver right now either. That's why I'm kind of looking at gold as a pass on that 1300 area, even though it's a big psychological number. Just too many unknowns right now. Let's take a look at the financial sector really quick, the ETF, the XLF. All right, so screen's locked up here, guys. Okay, here we go. The XLF came down to support yesterday, 1950, bounced a little bit. Again, the FOMC meeting today is going to dictate quite a bit. I don't think the financials are something. A lot of adjusting positions today. The Bank of America. Let's take a look at that one. Came down, touched support 1624 yesterday, bounced up a little bit. Let's take a look at our buddy Wells Fargo. Still thinking this is an incredible short. We're trading, looks like 45.50 printing this morning, down a little bit more. Here's the weekly, so we're down about right there. Fully believe we can get back down to 44.29 and even lower, maybe 43 on this stock. Probably not a lot of upside on buying that one. Let's take a look at JP Morgan. Again, like the strong of the strong, I don't see a lot of reasons to short this, but I don't think the banking sector's got a lot of edge to it right now, so kind of passing on some of those. Let's take a look at American Express. Glad to see this get back down below 66, 67. Looking at this now after we kind of had a massive move up as a little bit of a lid there, and I think we can actually just ease back down into 62.90 on AXP. Let's take a look at Facebook. Then we're going to hit some stocks that were in the earnings scene yesterday. Even though we kind of broke below 130.14, I still don't see this as a short. Do you take a stab at this? I think you got to back the truck up situation at 123.70. With the market conditions the way they are, I think you got to just sit tight on a lot of longs right now. It's easier to sell the weak stocks than to buy the strong stocks right now, put it that way. Let's take a look at Electronic Arts. All right, so up a tad, 5 or 6%, if you consider that a tad. So it looks like we're printing about 82 right now. So what's happening is we kind of reversed back up above 80.17, but we're coming up into that 82 area. Again, I think you've got a stock that's just kind of gotten back up into an area you could sell it right now. Don't see a lot of upside in buying anything. U.S. Steel, they missed obviously 17 looks like we're printing this morning. So here's where the weekly is, 1608 unfair lows on the weekly. And we're going to talk about a couple more stocks when we come back, folks, that were in the news yesterday afternoon. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Waiting for my server to reboot here. Here we go. A couple of stocks we need to mention from yesterday's numbers. Let's take a look at Herbalife. I've got a great aunt and her husband that were big into this, distributors, whatever. Both of them took the heck out of all these supplements, and both of them ended up getting Alzheimer's disease. It's weird. Probably get a phone call after this show today. Here we go. 61.29 unfair lows yesterday on the weekly, on the long term yesterday. And it looks like we're printing about 57.96 right now, 57.96 pre-market. So, yeah, this is one you got to definitely block out from the long side here. Here's the daily and the weekly, both just breaking down. This would be in the scanner like a quadruple red across the board. Stay away from this stock on the long side. That's all I can say. Let's take a look at Occidental Petroleum, OXY. Got hit a little bit, for sure. Closed around 69. Here's the weekly. Your 69.96 is your selling point on Occidental Petroleum. Oil has come down to a kind of a weekly unfair low support area. So take that into consideration, but any types of rallies up into that 69.96, 70, 71, I think could be sold on Occidental. Alibaba, here we go. Looks like we're printing this morning around 104. So here's where we're at, right in the middle of a fair auction on the weekly. And the only numbers we can kind of hang on to here, you got 105.11 sitting up there. Again, not a big fan of being long anything right now, so I'd look at that as a little bit of a border to play around with on the short side. Let's take a look at Square. Man, I know some people in the merchant account services business that hate this company. Whew. Trying to put everybody out of business. Here we go. Let's see, 1163. So higher on transaction revenue, so not necessarily profits, of course. 1163 we're printing this morning, so where does that lie within the scale work here? 1148 in for highs on the daily. I don't know if this is, come on. Well, okay, there we go. I don't know if you got a lot of leverage on this one. I mean, you're kind of swimming around in the long-term middle of the fair auction, so I think you're just kind of rolling the dice either way, long or short on that one. Let's take a look at Gilead. Here we go. So looks like we're printing about 73.72 this morning. And here's Gilead. Here's the weekly. You could look at this. I mean, Steve yesterday had talked about the XLV, a lot of the biotech stocks getting possibly a decent bounce if, the Trump numbers start rallying. And I'm looking at this based on what he said, 73.20, markets are, this could be the contra trade. 73.20, definitely got a chance to play defense here on a long trade. 80.10 would be the top of the range. And a lot of these stocks could bounce hard, like Steve was alluding to, if Hillary has a chance not to win. But again, scary trade trying to be long anything right now, I think, for the rest of this week at least. And we're going to have some more poll numbers coming out, more valid poll numbers coming out starting today, I would think, based on some of the latest dumps, as you guys are already saying in the den there. I love that word. The Wiener probe and the dumps. I don't like to put those two words together, Wiener and probe. Here we go, Pfizer. 31. Let's take a look at, let's see, we're printing that. Oh, yeah, that's a real print this morning, looks like anyway. So Pfizer, not that big of a deal after some earnings announcements. This has been one, the slow pain. It's like somebody pushing on you with their finger after a while. It just gets irritating. That's kind of the way this trade is. 33.92 was that weekly breach. And we haven't really looked back, haven't had a lot of reasons to look back on this one. In fact, after we broke, we kind of had that daily couple of numbers there on the daily profiles to pay attention to on the short side. The weak stock in a market showing relative weakness, and now the earnings are out and could continue to sail south here. All right. Microsoft, let's see how Mr. Softy's doing in the carnage. Talked about this being, buy support. We've had a chance at that 59.49 2 days ago, kind of reversed off of that 59.49 yesterday. Still like this as a solid long-term investment. Have liked it for a while. Loved it when it broke out and retested that breakout point around 53, and really, again, kind of doing that same little magical spin around above profiles, catching a bit off the daily unfair lows. But I think major defense could be played below 58.50, and this is kind of a collection area, in my opinion, for Microsoft. I don't think anything's going to upset the apple cart with this one. Kellogg. All right. So earnings on this one, not out this morning. Man, that was, excuse me. Excuse me. All right, 75.21 closed yesterday, but looks like we're going to open about the same area. Here's the daily, getting back into those daily infra highs in the downtrend, being able to kind of clip that there. I think we easily revisit 74 and even lower on Kellogg. Johnson & Johnson. All right. So one of the things we talked about is, something was definitely causing heaviness on this stock. I kind of talk about stocks probably too many times in a row on this show, but when I see something that looks interesting, I'll kind of keep reiterating it. Just like the yen trade, I'm a big fan of that one, but I still think 113.55 is in order on Johnson & Johnson here. Playing defense above 116.33. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. HPQ, I was looking at the scanner, looking at downtrend reversals. Not a lot of candidates on this one. Let's take a look at HPQ really quick. All right, so talked about this one the other day. Talked about, probably wasn't a great idea to short this, even though it broke down the weekly. And then last week we reversed back above 1402, and then this week we kind of retested and moved higher. Good signs here. Here's the daily on HPQ. So you got 1426 and 1402. If this is not one to short, you've got way better shorting opportunities out there than HPQ. Scanner kind of told us that really quick. Darden Restaurants, DRI. It's really interesting. Gas is cheap. Food is cheap. And nobody wants to go to the restaurants. What was the numbers? 15, was it 15 restaurant chains have gone out of business this year already or something like that? Major restaurant chains. Here's Darden, 65.97. I think you can, man, if you can get a gift to get back up there, that is a selling point on this particular stock. Let's take a look at good old McDonald's. Relatively cheap, P. Food is relatively cheap. You go to another country and it's amazing. Food's not that cheap in other places. I mean, we've got it kind of licked as far as, getting it out of the field, transportation, store, blah, blah, blah. On a relative scale, relative to income, our food is relatively cheap. You go over there to normalized wages in other countries. I mean, it's actually not that cheap. McDonald's. So, kind of got a gift getting back up into this 112.49, 120, 112.50. I still think this can be sold. I think you can play defense above there, and I think the market's going to drag a lot of these things down. Ralph's does not have a symbol yet, I don't think. I don't think anybody's taken Ralph's public, so we're gonna stay away from that one. Let's take a look at Disney. Man, I remember that day like it was yesterday. Free operations when you eat at Ralph. Here we go. Unfair lows, 92 on Disney. And again, you look at this, you step back, and you just kind of feels like this thing is just ready for a massive, massive dump. I mean, ESPN's just a big, heavy weight of pain on this company also. And the unfair low is 92. If we can just breach, I know we did it the other day, and then kind of got back up into the profile, but I think this thing's due to really start seeing some much slower numbers on Disney. Home Depot. we've been really hammering this one on the short side, talking about this as soon as we broke below that 133 a couple of months ago. Again, the harbinger of bad news, long-term profile appearing above price action, and this thing has just come apart at the seams lately, huh? Again, getting below 126, talked about being able to play defense there, 126.46, and now we're 7-8 points lower, and no reason to take the trade off. Zero reasons to take that trade off. Let's go into our dashboard here, and let's look at, let's try to find any stocks that are hanging in there. We're going to look at a couple here. Boeing. Let's take a look at Boeing here. We're going to look at natural gas in just a second. February natural gas. Okay. So Boeing talked about, staying away from this from the short side at bare minimum. Here's the daily on Boeing. Price action appearing, profile appearing below price action on the daily. That's your support area, 140.24. I don't think you can do anything until we reach that. And the reason I say, we may actually come down is, market could drag this down. That would be your bounce opportunity, just like it was around 136, 140.24 is big time support there. Let's take a look at February natural gas. February natural gas. All right. There you have it. Somebody's asking for that in the den. I don't trade natural gas myself. I've talked about that. It's not for people with heart conditions to trade. Here's the weekly, and here's the daily. Again, had that harbinger of bad news on the daily here, above price action pretty significantly, actually. So what do you do with this now? I don't know if you can find any reasons to really try to pick something up on sale down here, unless you're going to look at the $3 area as some psychological area. But I mean, we didn't even hardly pause at that area. I think you just got to wait for new information to appear. Let somebody else find the bottom on this one. Let's take a look at January beans. All right, so as we look at this, we've talked about this thing ultimately getting back down to 984. I think we reached that this morning, low of 986, got in that neighborhood, started bouncing a little bit. So here's the January bean 07 situation. Do we bounce higher? 986, 984, 985 rounded off, 986 rounded off. This is pretty good support on this right now. A big, wide weekly profile POC, top of the mountain, and that daily unfair low. So you got some support here. Beans are just kind of going to churn around here at best, I think, but you may have a little bit more upside off of this 986, 985 area. Where's your targets on it? Maybe 1008, somewhere in there. All right. Notes. Still not a big fan of even playing around with these right now. We've talked about that. Here's the daily on the notes. We've just gotten back up into the bottom of a profile that had appeared above price action yesterday. And I think you have zero leverage trying to trade notes, especially with the FOMC meeting today. They're going to, of course, rattle off all the stuff that they can to be dovish, which is the political uncertainty. I'm sure they're going to throw that one in now. Probably throw in Italy, whatever else they can use as a prop. Going back to the dollar, continues to sink a little bit as the show's going on here. 97.16 is that big mega support on the dollar right now. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Celgene, taking a look at some XLV stocks here to close with. Man, that nice bounce there, 101.27. This was, I was looking for yesterday. I had the scanner up. I was looking at stocks in that category, really coming down into the top of the box from above. Celgene was on there and bounced pretty significantly, actually. But in the XLV sector, there's not a lot of green shoots here. So you want to start seeing some things turn, really, even on a short-term basis, or even the sector in general. Again, Steve Banger was talking about, the Trump numbers may kind of cause these things to start catching a bid, but you got a tug of war between the market possibly selling off in general and, the healthcare sector possibly having some green shoots at the same time. It's just going to be volatile as heck. But Celgene, again, looks like it's bucking the trend a little bit here. Alexion Pharmaceuticals, ALXN. Let's take a look at that one. Of the stocks in the sector, if you forced me to buy one, 126.99 support on Alexion. Last week had a really good week, and looks like kind of back in the fair auction at bare minimum, looking better than a lot of the biotech stocks. And here's the daily. So looks like it's holding, consolidating above that 126.99. Not a bad looking stock right now, actually, all things considered. Let's take a look at IBM. All right, so a stock that kind of broke below 156 and then has found some resistance on that way down, rallying back up into 154.01. I really don't see a lot of reasons to buy this stock. I think there's a good chance that we could head lower back into 148 on IBM. And we got to look at this one, Twitter Watch. Scary stock to trade right now. Very news driven. The big number you got to pay attention to right now, 1718. We reached a low this week of 1726. You could look at this a couple of different ways. Profile's edging higher, kind of sitting on support, not wanting to go down, but you could also look at it as not wanting to get away from support. Trade this lightly. If you're going to trade it, they could come out with an intraday announcement on this one that would just, the thing would come unhinged either way. I haven't looked at the options market on Twitter lately, but I'm sure if we've consolidated lately, you could look at the trade on this one could be buying volatility, actually. Kind of compressed down here for a while the past couple of weeks. Take a look at that. Big Mo had a really good opportunity yesterday. Got back up into the fair auction last week and came down and sitting right on support there at 65.38. So I'm waiting to see if we can cross that border on Big Mo, get below 65.38. A weekly close below would really, really put a good stake in the ground on that to get short again. Guys, you've been great. Stay tuned for Larry Pesavento. We'll pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.